One of the best ways to be great is to study those who are already great. One of the goals I have for this channel is to strive for greatness in investing every day. I want this to be a community of investors that want to be the best investors that we can be. But we need to measure ourselves against those that already achieve that level of greatness every year. Consistently beat the market, consistently stick to their investment plans, and consistently study the best businesses in the entire world. That set of people are the super investors. And today we are looking at what they bought and sold in Q1 of 2024. Welcome to the Quality Investor. This is part 2 of the Super Investor 13F Q1 buys and sells. With a commentary about why we look at what the best investors do, I link the description to that video below. Today though, I just want to get right into it. We are going to discuss 2 funds and then do a quick overview of what the biggest moves this quarter have been. The first fund that we're going to look at is the Yacktman Fund. And secondly, we're going to take a look at the Bill and Melinda Gates Foundation. But before we get into those buys and sells, please remember to like this video below and remember to subscribe to the channel so you can stay up to date on all the quality businesses in the market. The Yacktman Fund was founded by Donald Yacktman in 1992. Today, however, it's run by his son, Stephen Yacktman. He is now the chief investment officer after his father, Donald Yacktman, stepped down in 2016. Donald Yacktman popularized a metric known as the forward rate of return. It essentially takes the last 7 years of normalized free cash flows over the share price and then adds in the 5-year projected EBITDA growth rate. The basic idea is that when investors buy a stock today, it gives you an idea of what rate of return to expect in the future. I also wanted to choose this fund because I very much agree with the investment philosophy. In terms of investing in good businesses, the Yacktman Fund says we seek to invest in higher quality businesses at value prices. A good business may contain one or more of the following: high market share in principal product and or service line, high cash return on tangible assets, relatively low capital requirements allowing a good business to generate cash while growing, short customer repurchase cycles and long product cycles, and unique franchise characteristics. I view bullet point number 2 here, high cash return on tangible assets, is very similar to one of my favorite metrics, return on capital employed. And I also like to seek out very capital light businesses. Capital light businesses don't have to reinvest a lot of money back into the business to continue growing. Therefore, they spin off a lot of cash to investors. A lot of trading in this quarter. However, you can see that the fund invests heavily in basic materials such as Canadian Natural Resources, Reliance Steel and Aluminum, and Olin Corp, along with a lot of energy as well. We have Diamondback Energy, EOG Resources, Devon Energy, and more. And then outside of the big tech such as Microsoft and Google, also a lot of just consumer staples, Pepsi, Procter & Gamble. So very much a lot of businesses considered to be very boring, but have very good economics and are very profitable for investors. So taking a look at the buys and sells for this quarter, you can see they were quite active. Out of the 73 holdings, it seems like he did something to each one of them. Looking at what he sold off completely, Weatherford International and US Bancorp. And he also had a very large reduction in the Spider S&P 500 ETF. My feeling there is because the S&P 500 has been trading so high in 2024, he is probably taking some profits there. He trimmed a lot of other positions in his portfolio, most likely profit taking or funding the buys, which we'll get to in a second. But all in all, it looks like he's really reallocating his portfolio to what he feels might be better growth prospects in the future. And speaking of those buys, he added Kellanova, Darling Ingredients, Teledyne Technologies, Aon, and Visa. Followers of this channel know that I'm very bullish on Visa. It's actually my second largest position. But all in all, the buys in general seem to be a lot of consumer staple type businesses. Hershey, of course, a large add. He added 115% to that portfolio. A lot of people have been saying Hershey is undervalued. I've not looked into him that much, however. Kenvue, which was spun off of Johnson & Johnson. Unilever sells a lot of consumer staple products. Tyson, a consumer food products. And then, of course, a lot of the energy and materials such as Olin, Canadian Natural Resources, Devon Energy. But he also added to Warner Brothers Discovery, which is curious. I don't see where the large growth is there, but obviously he sees something that I am missing. All in all, a very active quarter for Yacktman Asset Management. All right, so let's look at the Bill and Melinda Gates Foundation Trust. Now, this trust, of course, is the investment arm of the Bill and Melinda Gates Foundation. which does a lot of charitable work around the world. But the investments themselves are managed by Cascade Asset Management. Essentially, Bill Gates founded Cascade Investments in 1995. With Michael Larson, the current CIO, at its helm, the Kirkland headquartered holding company now manages over $40 billion. This is essentially all of Bill Gates' money. So knowing that this is what Bill Gates founded to manage his money, it's hard to say how active Bill Gates himself is in picking these investments. Obviously, it makes sense. Microsoft is his number one position. However, Michael Larson seems to be the one who directs most of the investments. And I would say this is a very solid fund in terms of long-term value creation, the type of investments that I like to go after on this channel. Waste management, very strong number 2 at 16% of the portfolio. There's always going to be a need for trash collection. And it's also no secret that Bill Gates is very good friends with Warren Buffett. So of course, his third largest position is going to be Berkshire Hathaway. And like Buffett, he has a large stake in a railway and also a lot of stocks that are just going to be those everyday solid businesses that the economy will always need. Caterpillar, Deere, Walmart, FedEx. Caterpillar and Deere, to me, that's interesting. Might as well take the duopoly, take both sides of that, hedge yourself a little bit. But as we can see, there's not a lot of activity this quarter. Basically, he trimmed 2 positions, Microsoft and Berkshire, probably using the proceeds to fund some charitable events. That's essentially what the point of this portfolio is. I believe I read somewhere that Bill Gates wants this entire portfolio depleted 20 years after his death. So while there's not a lot of moves in this portfolio generally, I do think it's a very impressive portfolio, and I always like to keep tabs on what Bill Gates is doing with his money. So here's a breakdown of the most owned S&P 500 companies by the super investors. Microsoft and Google both lead the way. 32 super investors own Microsoft, 31 own Alphabet, and third is Visa with 24 super investors owning it. I'm not going to lie, this pleases me very much. My number 1 position is Microsoft, my number 2 position is Visa, and my number 3 position is Google. But of course, you can see a lot of other heavyweight names on here. Amazon's number 4, followed by Meta, Berkshire, MasterCard, Wells Fargo, Apple, and United Health round out the top 10. And just so you know, United Health, followed by Apple, are my number 4 and 5 largest positions. But all in all, I don't think much can go wrong owning these positions as the largest in your portfolio. Looking at the top buys last quarter, we see Google was the number 1 bought stock, 7 buys, followed by United Health Group with 7 buys as well. And then a lot of people seem to pick up the weakness Apple had in Q1. It was down roughly 12% at one point year to date. In Q1, 6 super investors either added to their portfolio or made it a new position in their portfolio. Number 4 is interesting to me, Charter Communications. I personally am not bullish on the future of cable. I think it's a dying industry, and I honestly don't see what the value proposition is for Charter Communications, but I'm also not a super investor. Another one with 5 either new positions or adds to the portfolio in the quarter was Adobe. I personally added Adobe as a new position early in Q1. But it seems to me these super investors were taking advantage of some early weakness in 2024 in some of these stocks. Adobe's been down big this year. Apple's been down big this year. So is United Health. Starbucks is down big this year. I believe Zoetis is even down a little bit this year. So it seems like a lot of great businesses have a little bit of weakness this year, and the super investors are taking advantage of that. Looking now at the top sells for the quarter, Microsoft had 21 reductions or total sells from portfolios in Q1, followed by Meta with 19, Google with 14, and Amazon with 13. To me, it seems these are pure profit-taking moves here. Perhaps these positions were a little overweight in their portfolios and they wanted to reallocate capital, but I don't see any weakness with these 4 big businesses here that would prompt selling for fundamental reasons. In fact, looking at the top line here, we see Berkshire had some sells, JP Morgan, MasterCard, Booking Holdings, Merck. None of these businesses strike me as fundamentally flawed, prompting large sell-offs. So it looks like a lot of the selling in this quarter had to do with taking profits or maybe reallocating capital to newer positions or other positions. All in all, there was not a lot of big blockbuster movement in this quarter. Super investors basically were trading big names for other big names. There's no new surprise business that has never been on this list here that popped up suddenly. The market itself has been a very bullish run the last 18 months or so. So a lot of profit taking and capital reallocation. Thank you for watching today's video. And if you've made it this far, go ahead and subscribe to the channel. Thank you. and happy investing.